This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back to the Research Talks here from Stockbox with Alan Green, where it's decisively cold now, isn't it, Alan? It's definitely gone very chilly.
It's strange actually. It's just cold and grey because we've had this run of days where you kind of wake up and it's grey and there's this grey overhang and it's just cold. The weather's benign, there's no rain. Might be a bit of mist. There was a bit of mist the other day, but also no wind either. So it's kind of Groundhog Day at the moment. But actually, rather have a run of no rain because you can get a lot of stuff done and all the rest of it. But it's definitely colder. I've been out on. I've been using. I sold one of our cars, and so I've had to get over and see my mum who's in hospital, and I've been using the motorbike to get over there, and thankfully I've got heated grips, but noticeably colder. Noticeably colder.
Yeah, noticeably colder, definitely. Well, of course, a lot's happened this week as well. We're through the budget and we're through the United States elections, and at the moment, anyway, the main indices responding well, whether it's all based on liquidity and effectively hot air, or whether there's actually some confidence and buoyancy coming back to the markets, I suppose remains to be seen. But at least those two things are out of the way now, and there is now certainty about what we can expect. So today we're going to be talking about a couple of those potentials, Mendell Helium and Great Southern Copper. Of course, Mendell having some good news recently and again today on Friday, and of course Great Southern as well getting on with their exploration. And we're going to be seeing each other next week, Alan, aren't we, at the Aquis Exchange event, where a few companies will be pitching, and Mendell will be one of them who will be there. Nick Tulloch. So we can definitely catch up with him. And if anyone does indeed want to head to that Aquis event next week, you can get a discount code by using the Stockbox code, which is SBOX20, and that will give you 20% off what is already quite a cheap ticket. But look forward to seeing as many people there as possible. But on to today, Alan. So let's talk Mendell Helium first of all to start us off.
Mendell Helium. So, of course, this is the company that has evolved from Voyager Life, which, of course, it was a CBD company, and I think it took a lot of people by surprise. But of course, we both know Chairman Nick Tulloch very well, and Nick is actually CEO of this company, but he's also just become chairman of M3 Helium, which of course is the operating company actually based in Kansas. Now the opportunity came about, and the company saw an opportunity, and as announced on the 27th of June this year, an option to acquire M3 Helium Corporation based in Kansas. At that stage, held an interest in 6 wells. That's all changed, and I'm going to cover that in a second. And of course, usual caveats. There's no certainty that the company's option to acquire M3 Helium will be exercised, and also whether it will successfully complete its readmission to Aquis. But I think knowing how meticulous Nick Tulloch is and his team, that I have every confidence that will happen, and that of course will now complete early in 2025. I think by the end of January is the current plan. So Mendell Helium is going to be the holding company for M3 Helium, which is focused on exploration in Kansas. And the unique thing about M3 is that they have wells that are not only producing, but are also producing ahead of what would generally be the accepted level for commercial success. In other words, the wells are producing quality helium at a greater rate than a lot of existing wells do. And of course, we know about helium. It's a colorless, odorless, tasteless, non-toxic inert gas, the second lightest and most abundant element in the universe. And it has a multitude of applications, but of course it can't be synthesized. It can't be produced synthetically. So We spoke earlier, of course, Mark, about helix separation and Bo Sears, his book about helium, the disappearing element. It's a very important gas, and sourcing a good supply is crucial. And M3 indeed have access to one of the most potent and productive gas fields in the world, notably the Hugoton gas field. When the company started working with M3, of course, they came to Voyager, took a loan. Voyager provided a loan to the company to fund the drilling of several wells, and indeed, a little further along from that, the team there actually self-financed the drilling of a further well. So across these wells, they're a team that understand the business, want to invest in the business, want to be shareholders in the business. So everyone is very much aligned in terms of getting this company over the line and getting everything sorted. But this week has seen what I see as a really seismic development for the company, and I mean that in the most positive way. I hope the drilling and the work that they're doing doesn't literally shake the earth, but the company has agreed, or rather M3 Helium Corporation has agreed a farming agreement with Scout Energy Partners, and Scout are key to everything Mendell Helium and M3 Helium undertake, in that they are the owners of the Jayhawk gas processing plant. They also own a sizable acreage across the Hugoton field, and the agreement that was announced on the 6th of November was a farming agreement covering 161,000 plus acres of the Hugoton gas field, where M3 has committed to drill a minimum of 25 new wells. But the estimate from management is that there is a potential 100 to 200 well opportunity. And, these sort of numbers, the sort of production of helium from these numbers, is going to create a very sizable company. And when I say sizable, I mean, a mid-cap listed entity. Which we often talk about undervalued opportunities, Mark, and how these opportunities, the potential, has yet to be realised. But we've got here a company that already has producing wells. The wells are producing gas. That gas is being piped directly to the Jayhawk processing plant, and money is being earned from the production and the sale of that gas into the market. So what Nick and the team have done is developed a plug and play solution, which is going to be cash generative instantly, and is going to grow exponentially once these other wells come on stream. So the elements of the deal that were announced on the 6th of November, as I say, minimum 25 new wells, a potential 100 to 200 well opportunity, all production from those wells to be delivered to Scout Energy's gathering system and the Jayhawk processing plant. But this is being undertaken with a fixed helium price and an annual price escalator based on CPI from the 1st of January 2026 through to the end of 2029, which will give Mendell Helium ample time to complete that process and become a hugely cash generative company, and dramatically change the structure of and grow the structure of the current business. And having that fixed helium price is key. I know Nick, I was talking to Nick recently, he'd attended a conference in Houston on helium production, and it was the general consensus was that the helium price for now had pretty much peaked. So securing a fixed price agreement for that period up to 2029 is a massive feather in the cap for Nick and the team. In addition to that, they've agreed discounted royalties and operating expenses with Scout Energy. The gathering and processing tariffs normally charged by Scout have also been waived in return for the supply of methane from the new wells that will be drilled by M3 Helium. They also have an additional agreement with Scout, which is a right of first refusal over any other farm outs in Scout Energy's Kansas range. So basically, they are working as a partnership. Anything else comes on stream or anything else looks prospective, then Mendell Helium will have first right of refusal to develop it. So the agreement the agreement has provided that in when drilling commences, or by the 31st of March next year, whichever comes first, M3 Helium will pay Scout Energy a fee of $1 million, and in the event that M3 doesn't proceed that with that agreement, then of course no fee will be payable. But this is frankly an immense opportunity for the group, and of course the Hugoton field has such potential and is so hugely prospective that that there's scope for further agreements. And indeed, as if to underline that, they on the 8th of November, which is of course the Friday of this week, the company announced it had acquired interest in 3 further wells on the western side of the Hugoton gas field, 2 of which are in production, and the third is believed to be suitable for conversion into a water disposal well. Of course, in extracting the helium, a lot of water is used, and then that water has to be pumped somewhere, so it's pumped back into the dormant well. Comments from Nick, today's acquisition is a further example of the progress that M3 Helium is able to make due to its connections and partnerships in the Kansas region. So I think we're going to see a lot of this in the coming weeks and months, and certainly once that agreement is completed in January, there's going to be a huge leap forward, I believe, in the valuation of Mendell Helium, and of course the valuation of the company. I should note at this present moment in time, the shares are trading at 4p, which gives Mendell Helium a market capitalization of 1.7 million. And I think when you look at the deal that's on the table here, the exponential growth potential is, I think, unrivaled by any company we've discussed of late, Mark.
Yeah, I think what Nick has done there is really good. I think I would say they probably will exercise that option. Obviously, there's still that caveat, as you said at the start, but why would they not, when they've got producing helium wells, an option over a huge swathe of land to explore for more helium and sell it straight into Scouts?
Well, I think it's possible that perhaps the existing management in helium saw the potential, but perhaps were unable to put into action on a larger strategic scale the growth and the infrastructure that's required to build a mid-sized company. And of course, that I think has become evident because Nick, of course, has now been appointed chairman. He's chief executive, of course, of Mendell Helium, but he's now chairman of M3 Helium, and that was announced also on the 6th of November. So I think that shows the esteem in which Nick is held by the team in Kansas, and of course, he's the level of control and influence now he has in that company. I think is integral to the deal, and I think it's just another tick in the box. So it's a very exciting few months in prospect for the company.
Indeed. Well, thank you, Alan. So let's move on and talk about Great Southern Copper and everything that they're doing over in Chile. Yeah,
so Great Southern Copper, equally, things are really starting to move for this company. So, of course, Great Southern Copper listed on the London market. It's the company's currently got a valuation of 6.3 million. Shares are traded as high as 3.1 million and 3.1 pence and as low as a penny. Currently at 1.41 pence. So we've seen since October last year, this year rather, the shares are trading at the penny and have really started to build over the past few weeks, and of course with good reason. So as the name would imply, GSCU, the company is focused on projects in Chile, the Especularia project in particular, and of course more recently the Cerro Negro project, which the company recently completed due diligence on and announced that it was going to purchase. So the recent developments have been key. Of course, in June this year, the company signed a purchase agreement for the Artemisa project following a due diligence period of 90 days. That's about nearly 1,700 hectares of new concessions and mining rights. The company also in June raised some money, raised 1.25 million at 0.12p to progress Especularita and the other projects. And then, of course, in July, announced that the 4 months due diligence that had been undertaken, they had decided to sign the agreement and finalize the option agreement. And of course, Cerro Negro includes the historic Mostaza copper, gold, and silver mine, formerly owned and operated by the mining giant Antofagasta. Now, in terms of the potential there, as it came, there was a 1981 non-JORC compliant mineral resource estimate of 190,000 and 190.6 thousand of sulfides, which at that point included 1.2% copper, 80% grams per ton silver, and 0.45 grams per ton gold. Early September, Sam Garrett, of course, the chief executive, announced the company was undertaking a maiden drill program, expanding that drill program due to the recognition of significant additional copper and silver mineralization. So they'd undertaken a desktop study, looked at the data, 25 historical diamond drill holes there. And Sam basically announced a 3-part plan to develop the asset. Firstly, to drill beneath the historic Mostaza open pit mine to develop a high-grade resource. Secondly, to expand on the Mostaza deposit along strike, targeting those mineralized structural extensions that have been identified. And thirdly, to explore its depth and target large-scale porphyry-style copper deposits. Of course, we've heard a lot about porphyry-style copper deposits recently. Of course, that announced that the Desert Scheelite project by Guardian Metal Resources in Nevada, the huge potential there. But the porphyry-style deposits aren't restricted just to Cerro Negro. Across at the Viuda prospect at the Especularita project, the company identified new porphyry-style exploration targets at the Viuda prospect, following some rock chip sampling that they'd undertaken, and the rock chip sampling results were pretty good. The company came back with 3.5% copper, 13.8 grams per ton gold, and 56.6% of silver across the samples that were collected. This is, of course, part of the Artemisa option agreement, and Sam said at that point, with the developments both at Cerro Negro, the Mostaza mine, and of course the Viuda prospect, Great Southern Copper is developing an enviable pipeline of drill target opportunities. This is, of course, early October. At the end of the month, the company had a team on the ground there working to collect the rock chips, and the exploration results from those rock chips added further fuel to the fire. The exploration results included 4.6% copper. The company collected a total of 162 chips, 4.6% copper, and 177 parts per million of silver. They also identified that the company that the Mostaza mine, that the high grade system there had extended further a further 1.5 kilometers to the south and was still open. And the high grade breccia mineralization there was confirmed up to 400 meters to the east of the asset. So, as we often see when the company's exploring and drilling and sampling an existing asset with the new tools available, it's easy to identify that in actual fact the original asset is much larger than had been first thought, and certainly this is the case with the Mostaza mine. So obviously, developing and growing assets require funding. Yesterday, the company announced it had raised a further £780,000, and this is on top of the 1.2 million raised, of course, in June. That was raised from two private investors and also an existing majority shareholder. And indeed, that existing majority shareholder, Dr. Moyad Al-Kurtis, now holds just over 3.1% of the company, up from 0% previously. That's a total of 16 million shares. So the company is at a pretty exciting juncture. If we look at, I mentioned the share price performance of Great Southern Copper. That year high of 3.1 pence, of course, was back in May this year, and really it's been flatlining through the year. But the fact is the company now has well over 2 million quid at its disposal, and it's got a number of prospects and drill targets at very exciting phases. And of course, once this work starts and we start to understand the scale and the potential of the Mostara asset, and of course the Viota prospect at Especularia, I think we're going to see the share price progress back certainly to year highs and possibly beyond that.
Good stuff. Good stuff. Well, thank you, Alan. And I mean, I do like what the team are doing out in Chile. There's definitely, well, as we've mentioned, they've got all the different styles of deposits, haven't they? VMSs and porphyries, and they're going to have to go and really, explore all of them really, and see what turns up the best opportunities for exploiting it down further down the line. But Sam Garrett there, of course, a geologist, isn't he? You know, by trade, so he loves nothing more than being in the field there and also leading that company.
Yeah, he is. He's very much a hands-on guy. You know, he likes. You get the impression when you talk to Sam that he'd far rather be out actually prospecting, at the Mostara mine, and that's great. I think when you've got a leader like that, that's a really good thing to have. And of course, the scale. Chile's a huge country, so the scale of the opportunities they have are huge there. So the fact that they've got this historic Antofagasta mine, and we've seen so many times with other companies, where you've got an existing historical producing asset. You bring modern mining techniques in and take the time to study, raise the money, take the time to study. You find strike extensions. You find, in actual fact, the original prospect extends much further. And of course, a lot of the access infrastructure is already in place from the previous workings. So it's actually a much more. It's a far more practical way to approach mining, because it means actually bringing that mine back into production wouldn't cost as much as it would do, for example, if you just had some virgin territory and you identified an asset in the middle of nowhere. So that's another factor to consider as well.
Yeah, indeed. Well, like I say, they're moving down through those stage gates there quite nicely, and I think 2025 could be very transformational for Great Southern Copper. Of course, it is that more sort of, it's not super early stage, but it is that more sort of exploratory stage than perhaps, Mendell, for example, who we've talked about, who really it's about going and finding helium, tapping new wells, etc., and getting it into production. Great Southern Copper obviously doing more of the exploratory style of work. They're going down the normal, finding a resource, proving it up, etc. But next year, I think for that company will be pretty transformational with where they're going to be sitting in a year's time, effectively. So hopefully, they do. As you say, it's very prospective, and as I said, they've got lots of different types of deposits there. So and on the historical mine, there's clearly a resource there. They're not stabbing in the dark. It's just now a matter of really, going through those typical proving up processes which is typical for exploration companies. But thank you, Alan. Thank you very much for talking to us there today about Mendell and Great Southern Copper. And I'll see you next week in London. Looking forward to it.
Yep. Thanks, Mark. Look forward to seeing you next Tuesday.
Well, today we're joined by a new guest. The new guest is Dan Flynn, who is a stock commentator and writer who's been writing on lots of junior AIM stocks for a number of years, a journalist in the space, also a private investor, I believe. We're very pleased to be welcoming Dan on today to the Research Talks podcast here to give his opinion, something a little bit different on the Research Talks here, get a different opinion on a different stock, actually, because today we're going to be talking about GreenRoc, that's GROC. And Dan's going to be giving us his take effectively on that stock and highlighting some of the macro factors that perhaps are worth considering when looking at a stock such as GreenRoc. But Dan, I mean, first of all, welcome on to Stopbox. It's the first time we're talking. How are you doing?
Oh yeah, hi Mark. Thanks for having me. Yeah, doing really well. How about yourself? How are you doing?
Yeah, all good, thank you. Yeah, very, very good. All
Mm.
good. Of course, we've had the US elections completed just the other day, so that's now behind us, and we can hopefully move on. The budget's behind us as well, so now we can move on from some of these macro or big macro factors that perhaps would be having an impact on the markets as we head towards the Christmas period. But before we start, Dan, talking about GreenRoc, I wonder if we could perhaps just maybe a minute or two just on yourself, where you've come from, your sort of background and experience in the junior sort of mining, if you like, or the junior resource sector of London.
Yeah, absolutely. So my background is as a financial journalist. I spent quite a few years there working for trade publications like Investment Week, and I worked at the Daily Mail for a while, covering pretty much everything from markets and the asset management sector to personal finance. I went freelance a number of years back, really to focus on the market side. While I was at the Mail, I found that the junior resource sector had, to be honest, a lot of the most interesting narratives when it comes to writing. So over the years, I've been covering these sorts of names for value markets and mining Maven. Over the period, I've also become a bit of an investor myself. It's difficult a lot of the time, but you get some good periods as well. And like you say, with the budget behind us and with the election out of the way, perhaps we could be approaching a bit of a bull run for the natural resources sector.
Well, let's hope so. I mean, it's overdue its time, isn't it? And you can see it now. You can really see it. Gold, of course, performing at all-time highs. Uranium at all-time highs. It is just one or two commodities that are really starting to fly. So hopefully the rest of the sector can indeed follow. I mean, it is very difficult at the moment. Of course, we talk to a lot of people on Stopbox, and at the moment it's difficult to get financings away. People tend to be sounding a bit more depressed in the space at the moment, but it's at these dark times when things will, you can say the bottom is near, if not in already. But of course, we just have to wait and see, and all we can do during that time is effectively look at companies that we perhaps think are research companies and make decisions that they are perhaps undervalued or have got potential, and start positioning for that tide to come back in when indeed it does. So today, of course, GreenRoc, who we've not spoken about before on Stopbox, but GreenRoc, a company over in in Greenland.
That's right.
I know Amaroq are over there as well. Amaroq, who were exploring for gold over in Greenland. So you're going to give us your take on GreenRoc, and I think we're just going to start really with a bit of a general company overview. Tell us sort of really what they're all about on a high level.
Yeah, definitely. I mean, like you say, funding's a difficult thing at the moment, but it's why now is the time to find the opportunities that will benefit the most when the sector turns, isn't it? So GreenRoc to me looks like quite an interesting opportunity at the moment. It's focused on producing graphite. So graphite isn't a material we hear about too much compared to the likes of copper, nickel, and lithium, but it probably holds just as important a role in the green transition. Electric vehicle batteries contain more graphite than any other raw material component by weight. They typically have between 40 and 80 kilograms of the stuff. So as global demand for EVs increases, it's estimated that demand for graphite will as well. It's set to quadruple by 2030, which is, it's big. It's big. And this is to GreenRoc's benefit because supplies aren't keeping up, particularly with China recently limiting exports of battery-grade graphite to other countries. So it means new supplies of graphite are in great demand. And really, this is the opportunity GreenRoc is working to address with its flagship graphite project called Amitsoq. So as you said, Amitsoq's based in Greenland, and it contains one of the highest grade graphite deposits globally. It has a 23 million ton resource grading an average of 4%. So on its own, that number probably doesn't mean a lot. But according to the company, similar projects grade an average of just 8%. So, that's more than double. So that's already a big tick in the box there. So what's good about GreenRoc is it's already advanced Amit SOC quite significantly. There's a lot of de-risking going on here. It's completed a preliminary economic assessment for the project. So that's produced an after-tax NPV of $179 million with 22-year mine life, averaging net annual revenues of $89.8 million. So that's pretty strong. That's a lot of big numbers there to think about. But what I think is particularly interesting about GreenRoc is it plans to process its graphite as well as producing it. And this is pretty important. So without getting too technical, EV manufacturers can't use raw unprocessed graphite in the anodes in their batteries. They need it to be processed into something called spherical graphite before they can use it. So a lot of companies will pass the graphite that the raw graphite they produce to someone else who will turn it into spherical graphite. But GreenRoc's doing that itself because the spherical graphite is a lot more valuable, so it can get a lot more bang for its buck, which is good considering the profits that could come out of it. So GreenRoc's looking to process its graphite into spherical graphite at a plant in Norway, which it hasn't constructed it yet, but that's in the development phase. And I think this is where the company really could start to generate a lot of profit if everything goes to plan. So the company's done a pre-feasibility study for the plant, which produced an NPV of $621 million. So all these large figures are obviously contingent on the mine reaching production and the plant being built and going live. But really, when you consider that GreenRoc's market cap at writing was just under £3 million, you can start to see how there would be room for the stock to move upwards as it, advances towards its goals over the coming months and years.
Well, yes, indeed. So 3 million. So, I mean, that I would say it's sort of typical, isn't it, of the junior resource sector at the moment. You're tending to see the valuations somewhere between perhaps 6, maybe 8, if you're lucky in some of the juniors. But I mean, this company here, GreenRoc, obviously they're much more advanced. You say they've got their PEA giving them the NPV of 197 million US, life of mine of 22 years, which is great, and expected revenues of $89 million per year. So, that PEA already showing how the economics, how they stack up for this project. So there's a couple of things. I mean, first of all, perhaps why don't you think it's realizing its value yet? Why don't you think the market is seeing the value? Because after the PEA, that should really be quite a big de-risking event there.
Yeah, I think the big issue here, as is the case with many exploration and development companies, is funding. It's really a bit of an elephant in the room for GreenRoc. So Amit SOC and the processing plant are big projects, and they're going to require a lot of money to be developed. GreenRoc hasn't got that money yet, but I would say the amount of progress it's making on this front is pretty encouraging. So I think that's something to bear in mind right now. So there's GreenRoc's applied for Amit SOC to be given what's called strategic project status. And it's pretty confident it's going to get that. This is issued by the EU. And that would be a massive step forward for the company because it would give Amit SOC priority treatment in the permitting process as GreenRoc starts to advance it towards production. But most importantly, it will also give GreenRoc potential eligibility for EU funding programs. So just last month, we saw a company called Tauga Group receive a €70 million grant to develop an anode material plant in Sweden. And in a recent Q&A, GreenRoc said it plans to apply for funding on similar terms when the next call opens in the EU in December. So, if it can get that sort of funding, then it's really going to have the financial firepower behind it that it needs to push this thing forward.
Okay, yeah. I mean that EU funding, yes, that strategic EU funding is what a lot of the operators in Europe are going for, isn't it? I know Metals One, for example, are preparing to make their pitch for that, but they are again waiting for their PEA/scoping study. I think they're kind of similar reports, really, and they're getting theirs prepared, and then they're going to go for the next round of pitching for that. But GreenRoc are effectively they're at that position now. They've got their PEA, so they effectively can make that pitch at the next round, which is December. You say?
Yes, that's right. So
Okay.
I think they said that they're likely to find out by March if they've got the funding or
Okay.
not. But
Okay.
so that could be a potential
And
milestone.
does the PEA include information on the capex then required? So we've got some idea of perhaps what is required money wise.
Yeah, it does. So Amitsoq has a initial capital cost of $131 million. So again, massive amount of money. But with some a big grant from the EU, that could cover a large amount of that. And I should also mention that GreenRoc's pursuing some other lines of financing as well. It says it's in discussion with a lot of off-takers and potential partners, and there's a US bank also that has given it a letter of intent for 3.5 million of funding. So there's a lot of potential avenues here to meet those massive costs.
Okay, so in short, really, GreenRoc have got a huge graphite deposit. I think you said it was. Did you say it was one of the biggest in the world? Is that right? Or
it's one of the highest grade in the world.
That's right, one of the highest grade in the world. Yeah. Okay. I mean, yeah. Okay. I mean, we can dive into grades. It was 24%. I mean, yeah. I don't know what that means in graphite terms, but if it's one of the highest in the world, then clearly the average is a lot lower than that.
It is. Yeah. It's the average is just 8%, so it's over double that.
Yeah. Okay. And they're in obviously Greenland. They've got their PEA. They're going for the EU strategic permitting, which will be in December, which hopefully, if they make a good pitch, that will unlock some funding that they can then go and take to, well, yeah, maybe it's twofold. They can take to go and advance the mine build, or I guess it would be actually moving down further studies. Would it? You'd get from PEA to sort of DFS, would you? You'd continue going down the study route?
Yeah, that's right. So the next step in terms of the development of Amitsoq, the project, is getting what's called an exploitation license. The company's applied for that, and it's expecting to receive that by year end. And once it's got that, it's funding aside, it opens the floodgates for really development to go forward. From there, the next bit would be the social impact assessment and then the environmental impact assessment. And then the company continues to advance towards mine construction, which it's slated for late 2026. So that's quite a long way away, and lots of stuff could happen between then. But I think the important point is, as it is advancing down that process, it's going to be crossing off a lot of important milestones. As it puts that out into the market, it has the potential to increase the audience and potentially provide a tailwind for the share price.
Mm-hmm. Well, you say 2026 sounds a long way away. I mean, we're nearly in 2025. So, I mean, in mining terms, I think another year is not bad at all. And considering they've got their PEA already down there, the next milestones, I would guess, for them to continue to de-risk the project would be, of course, the EU funds, which we will find out throughout perhaps Q1 next year, and then this exploitation license, as you say, and then further news on funding. I mean, if we just think about, perhaps the next milestones, if you like, if people want to put it on their watch list or perhaps hold shares or would consider buying shares, in your opinion, having done the research on this and the write-up on this, I mean, would you be happy to say you think it's a sort of a de-risked, not investment advice, of course, but a de-risked speculative play now? And perhaps what would be some of the key further de-risking points to look out for?
Yeah, that's a good question. I'd say this isn't greenfield exploration. It's really quite advanced along. So I would say it is de-risked to a point, but that funding point is going to be an important one for a lot of people because while it's waiting for these big funds, there is the chance of some short-term equity placings to tide the company over. But I would say that GreenRoc's been quite open about this, to its credit. In a recent Q&A, it said it needs funds to keep progressing its work at stock, and that's in the interest of all shareholders. It said it has stringent cost control measures in place. It's maximising the value of its fund. It's working to secure non-dilutive funds to alleviate the need for equity placing. So whilst that is something to keep an eye on, to return to your question, I think there's a real chance for this to re-rate on the basis of three areas. So GreenRoc's market cap is much lower than its global graphite peers at the moment, those with similar projects. And I think the things that have changed this is, one, as we discussed, the funding. If it gets that strategic project status and the funding from the EU, that's going to be a big one. I could see that having quite a massive impact, because a lot of people that had this on their watch list might see this as the kicker to finally invest. The second is the receipt of that exploitation license, which will enable development at Amitsoq to really move forward. The third is progress at the plant as we learn more about how that's actually going to take shape. GreenRoc's planning a pilot scale processing plant to learn more about how that'll actually work, so we can see more confirmation about what it's actually going to produce and how much this might be valued at when it sells it to battery manufacturers. And I think another important thing to keep an eye on when it comes to this company is the market at large. You see, one thing I really like about GreenRoc is the fact that it is located in Europe. And I think this gives it an edge on companies developing graphite elsewhere around the world. Because the European market is a massive one for EVs. It's a real gigafactory hub moving forward. So it's going to need a lot of graphite, but it doesn't produce any graphite at all itself. It's pretty much entirely reliant on China, which as we've already mentioned, has already started restricting exports. So this means that Europe's, on the one hand, is very supportive of companies like GreenRoc. The companies already had support from the European Raw Materials Alliance, and it's been graphite itself has been designated a strategic raw mineral. But what I think could be a bit of a tailwind moving forward is if China takes an even more aggressive stance on the exports of graphite. We don't know if it will or not, but if it does, it's only going to mean that Europe needs what GreenRoc's offering even more. And, that could mean more support, or it could mean an even more premium price for the project and for the graphite it produces when it does eventually reach production. And I think that sort of outlook is something that can only be a plus for the company at this point.
Excellent. Well, Dan, thank you very much for your time today. It's been really good to have you on the podcast here from Stockbox, and good to hear your take on GreenRoc. So looking forward to talking to about more companies with you in the future. But for now, thank you very much.
Excellent. Thank you, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stockboxmedia.com. Thank you for watching.